Thank you.
Mm-hmm. Oh, there she
So
is.
yes, we do have a link to Teams. So we Raven here is my co-host today. So she's going to be assisting individuals that might be trying to get in through Teams. But I'll go ahead and share my screen and get started with the presentation. If anybody has any questions at any time, you can go ahead and drop those in the chat. Raven will be checking that throughout. And then Raven, I would just ask if anybody new comes on during the presentation, if you could just ask them through chat to do the registration link.
Okay, and I see we have a raised hand here.
Oh, sure.
Selena, do you have a question?
You have yourself on mute.
It's different doing this on a cell phone. I'm normally
It
on my
sure
MacBook,
is.
so I'm trying to do it on a cell phone. But you said there's a link that we had to fill out in the chat, and I don't see that link.
Okay, let me go back and make
Mhm.
sure that that is there.
Okay.
I had put that in there, so let me,
Probably just need to repaste it out, repaste it for you.
okay.
I
Thank
see
you.
something now.
All right.
Yes, yes. Okay.
Wonderful.
Thank you.
Okay, so it'll take me just a minute and I will get that presentation up and running. Okay, everybody see the financial products and services? Thumbs up. Okay, well, thank you again for joining. My name is Kelly Kleeman. And again, that topic today will be financial products and services. So just to give you a little bit of information about financial pathways, we've got the address, the telephone number listed on the screen, but we counsel individuals through crisis. We coach clients to meet their financial goals, whatever that may be. And then we also provide financial education out into the community. Just to let individuals know, we offer 12 months of one-on-one counseling. It is currently for free. We were gifted a grant to be able to allow individuals within the community to receive that service. So if that is something that you are interested in, this is a great opportunity. The services that they cover are budget counseling, credit counseling, student loan counseling, and debt management. The Center for Home Ownership does have its own fee. And then if an individual wanted to go into our debt management program through Navicor, that is a $25 fee. But right now, credit counseling, debt counseling, those are some great opportunities, budget counseling to get that counseling for free. So, our mission is to help individuals and families build financial well-being. That is our mission for anybody in the community that we can offer assistance to. Some of the programs that we have here are our financial management and education, which again, it's going to cover that budget, credit, debt management, and student loan. We have our representative payee program. That is going to be anybody that Social Security has deemed they are not able to manage their finances, but they still want to live independently. We have the opportunity to be stewards of their finances. Senior financial care is anybody over 60 years old in Forsyth County. They also get to receive service for 12 months of free counseling. One of the things that one of the senior financial care program services offers is being able to do bill pay. So if you have an individual that is interested or they're just feeling like they're not as confident with um, paying those bills? Did they, questioning, did I make a payment? Have I overpaid? Did I not make it? So bill pay services, it is income based, excuse me, sorry about that. It's income based. So we would be able to go out into the community to their home and be able to manage their monthly finances for them. So that's a great service. And then, of course, we have the Center for Home Ownership, where we're able to do rental assistance. We have down payment assistance and lots of good areas around home ownership that these counselors will be able to get someone headed in the right direction. So lots and lots of good services and programs. Since I went through most of the services within each program, I'll just show you them. If there's anything that comes to mind for you, foreclosure prevention, again, that rental assistance, we go out and we do fraud and identity theft education. So these are just some more of those services within those programs. So today, again, it's financial products and services. So these are some of the reasons why understanding financial products and services could be important to someone. It's to help you choose the right account, loan and savings options. It can prevent overdraft fees, high interest debt, and hidden charges. I know that I personally have learned the hard way when it comes to being a member of a credit union or a financial institution, that it's usually afterwards when I've incurred a fee or not really understanding what those products and services were and how they worked within those banks or credit unions. And so I was always on the back end going, why did I get this charge? Why is there a fee here? So understanding your bank's services and what those fees are can be crucial to keeping more money in your pocket. So support savings, investing and preparing for emergencies, understanding credit cards and loans help build a strong credit score, making those on-time payments, and then confidence with money leads to better peace of mind. So hopefully we'll just go through some slides and, hopefully give you a little bit more insight to the differences between credit unions and then your just financial institutions, which would be banks like Wells Fargo, First Horizon, those kind of institutions. So as of 2023, 4.2% of US households were unbanked. That's a record low. I have not been able to find any new information to see what that data is now. It says while overall numbers are declining, younger, lower income, and less educated households are more likely to be unbanked. Younger households ages 15 to 24 have historically been almost twice as likely to be unbanked as the national average. So for me, a financial institution, whether it be a credit union or the bank, is a great way to just build that relationship so that you can get that history with them. They know who you are, and it helps to build loans futuristically as your goals change. So financial products and services can help you save money, spend money, manage money, borrow money. It just depends on starting with what your needs are and seeing where those banks can really help you watch your money grow, like I said, through a credit union or the bank. So these are just some differences. Commercial banks, I will say that a lot through this presentation, and I apologize, whether it be a financial institution or a credit union, because that's what we're comparing here today. But the commercial banks provide various services such as loans, accepting deposits, and other basic investment products and other financial services. Your credit union is very much the same. It's open to a specific category of people who are eligible for membership. And it is the owner structure of credit unions allows them to offer more personalized and lower cost banking services because credit unions are member owned institutions where commercial banks are usually owned by stockholders or shareholders. Investment banks are ones that provide corporate clients, such as large companies, governments, and investors, access to the capital markets. But that is not open to just you and I. Okay, so those are some differences. So typically, when you're going to start opening some type of an account, whether it be through the bank or the credit union, they're going to require that you open a savings account. They may require a minimum balance to open that account. And then, of course, you can expand to see if you want a checking account, or they have money market accounts that are interest-bearing accounts. So it's good to do research on the front end when you're looking at a new bank or a credit union to see what the service fees are going to be. Do they have a monthly, $15 the fee that they charge you for having the account? So you really want to do that research on the front end to find out what those fees are going to be for each account that you're trying to open. A lot of them have different terms. Money market accounts, checking accounts may different than a regular standard checking account. If you go into a typical savings account versus the third one here, a certificate of deposit. Certificate of deposit is one that you hold your money for a specific period of time, allowing for a little bit higher interest. I know post-COVID, they've been really trying to keep some of those certificate promotions around 4%. I'm not sure what the current rate is on a certificate of deposit, but it's always good to, again, research those different institutions to see who can give you the most for your money if a certificate of deposit is something that you would be interested in. 7 months isn't a long time, and it gives you the opportunity to get a little bit of money from the bank. It's free money. So this is an example of what that CD calculator might look like. And I know, again, it's not a lot of money, but if you have a little bit of savings that you just want to have that grow, a typical savings account, I'm just going to use mine for an example. So on my regular savings account through my credit union, if I have $100 in the account, I'm only earning 0.10%. So on the dollar, that's 10 cents that I might be earning for that $100. And so, I'm not going to earn very much money by leaving it in that savings account. And if I know that I can hold it into some type of deposit, at least I can earn something that's going to give me a higher interest rate. So this was initial deposit was 10,000. It was a 7-month CD promotion for 4. And at the end of that CD, when the time period is up, that individual would have earned $231.42. Again, it's not much, but that might be able to pay a bill. And then if you still didn't need that money at the time, you could turn around and put that into another CD if the rates were good and you thought that that was a good decision. The drawback of a CD is that if for some reason you needed to pull that money out, then there would be a penalty for pulling that money out before the 7 months or whatever the term is was over. So this is a comparison for credit cards, credit unions versus banks, APR. So on the left, well, my left, it is credit unions. I did some, just some local credit unions that we have. We have lots of good credit unions within Winston-Salem. We also have good banks in Winston-Salem. So I just wanted to show some of the differences between interest rates right now. So TrueLiant is offering, it's a variable rate credit card, meaning that it can change at any time. And theirs are typically anywhere from 10% to 18%. Then you have a legacy. So theirs is 11.65% to 16.65%. They are currently offering an introductory 0% balance transfer for 18 months. And then, of course, State Employees Credit Union, the average APR is 8% to 12%. And I'm not sure if they're currently offering some type of balance transfer, but this is a great opportunity because lots of banks, credit unions, and credit card companies are offering those 0% um, balance transfers right now. You just want to make sure that you have a plan in place before that promotion period runs out so that you don't get hit with all of the interest when the card's not paid off in full. So then you see the difference in like the bank with Wells Fargo. Then you're starting at interest rate at 17.49 to 28.49. So you can already start to see there's a big difference between what a credit union might be able to offer as far as a credit card rate versus big banks. Truist, theirs at 16.74, anywhere to 25.99. They also have a 0% introductory balance transfer for 12 to 15 months. Anytime you're doing a balance transfer, you also want to keep in mind that they do charge anywhere from 3 to 5% when it comes to balance transfer fees. I have found that, again, everybody's situation is going to be different. When I have done a 0% balance transfer fee or balance transfer period, I have found that the fees are generally less than the interest that I would have paid probably in a couple of months, 2 to 3 months on the balance that I was holding. So for me personally, I found that it was worth it to go ahead and do a balance transfer and go ahead and, pay that fee. So when you get down to First Horizon, theirs is 18% to 29%. And again, those it didn't really say anything about a 0% balance transfer right now, but it's always good to check if any of these financial institutions are a bank that you currently work with to see what your products and services are that might be able to help you lower payments, and just reduce debt faster overall. So the thing that kind of stood out to me, not necessarily in the credit union ones, but the Wells Fargo, their beginning APRs to me stand out pre-COVID. Pre-COVID interest rates, I feel like were, you know, typical to be about 18%. And now you see this post-COVID APR where interest rates really range from 25 to upward of 32 to 35% now. So this is a great opportunity if, you have some movement to change, just to get those lower interest rates and really dig into some kind of credit card debt, um, whatever that looks like for you. So that just kind of shows you a little comparison. So more products and services that both the bank and the credit union might be able to offer is your secured loans versus your unsecured loans. So your secured loans are going to be backed with collateral. Sometimes an individual may not even be thinking about their car when it comes to being able to refinance that car to pay off some credit card debt or a consolidation loan, maybe to help with a student loan if the interest rates are lower. You wouldn't necessarily want to do that if it was going to turn around and be a higher interest rate than what you're currently in. But secured loans are a great way because typically they do offer a lower interest rate because the bank or credit union can, take that asset back from you if you do not pay on time or if you get behind. So that would be your car and your house. The plus side of it is that again, those interest rates are usually lower, easier to qualify. The risk is that you could lose that asset. Then you have your unsecured loans, which would be your personal loan if you were doing a consolidation loan. Of course, both are based on your credit score and income. If you don't pay, it's going to go to collections, and because it's an unsecured loan, it's a higher risk to the financial institutions, so it may be harder to get that loan. Okay. So those are again just some differences for your secured loans and your unsecured loans. This is an example of, so I wanted to go ahead and put this in here. This is a auto loan payment, and the car loan is for $30,000. The payment on this one is $511 for 72 months, and the interest rate is at 7%, which, with a good credit score, a really good credit score, this to me is a fair assessment of one, what the car might cost, what the interest rate might be, and then, of course, being able to go out for 6 years on an auto loan, because your car payment's still 511. And I know for me personally, that would still be a big car payment to manage. So with this one, it just kind of shows the interest and how paying off or trying to make a little extra on a payment can be so impactful to really cut into that interest. So on this one, with the loan amount of 30,000, the total interest in that 72 months was $6,825.87. So at the end of that 72 months, that's 36,000, almost $37,000 you would have paid out on that car. We know cars depreciate, so sometimes that can be an issue with trying to refinance a car, is the age of the car, and then how much equity do I even have in the car? So that's why this is a great opportunity to just show the difference if an individual is able to pay more if possible. So the next slide is the same car. Now, I wouldn't focus on what the payment is. This is an individual of if they, decided that they were gonna, make that car payment and they're gonna do it in 36 months. The amount was still the same at $30,000. The interest rate was 7%, and the, term of it was for 3 years. The only thing I want to show here is the difference in the interest that you're paying, not if you take on that payment, but if you can just pay a little bit more each month to show the difference in just those 3 years on how much you would save in interest alone. So with this one, if they were able, then, what they would have paid out is $33,347.28. By doing that, the individual would have saved almost $3,500 in interest. So even though we have those auto loans, and sometimes it is safer to build that car payment out over time just to make sure we're able to manage the payments. Again, a $511 payment would still be a hefty payment, for my family, for me. But any chance you can to reduce those expenses and be able to pay down, it'll just end up saving you in the long run. So I just wanted to show an example of, what that could look like and how much interest we pay. And that's only at 7%. These credit cards, when you're talking 30%, you can just imagine how much you're paying over time in interest alone. So other financial products, or other services that if you do not have, a lot of people have Chime accounts now, Cash App. You have your bank, your credit union. If you did not have some of those, another way that you might still be able to get service is through convenience stores and the post office. If you needed to get a money order, that might be an option. Stores that sell prepaid cards. I know there's phone cards still, or you can, put money on your phone through those prepaid cards. There's check cashing stores and outlets. Walmart is still very much doing, again, money orders. They will cash, employee checks. And so those are some options that are out there. Of course, I will always encourage just, if you don't currently have a bank, but to get into either a bank or a credit union, again, it's just to build that relationship for future borrowing power down the road. Of course, the ones that we don't recommend ever, ever, ever is payday lenders because the interest is so high. There's nothing left over and it's so hard to repay back the payday lenders. Pawn shops, again, it's fast cash, but it might be, you may, excuse me, you may only get $20 for something that really was worth $250. Pardon me. And then the last one is the vehicle title lender, which again, if you have the title to your vehicle, the last thing that you would want to do, or there are better options, I should say, than going to a vehicle title lender because they do charge such incredibly high interest that a lot of times they make it almost impossible for you to be able to pay off what you owe and get that title returned back to you. So if there was a situation where you did hold your title to your vehicle and it was something that you were able to get rid of the vehicle itself, then, just trying to put it on marketplace or trying to sell it outright. There's lots of places now, dealerships where you can take a vehicle and they may pay you whatever value they are able to provide. But it's just a much safer way to do it that way than taking it to a vehicle title lender where you may end up um, losing the car and still owing them. So just something to be very, very cautious and try and steer away from at all cost. So options for opening a bank account when faced with challenges. These are challenges that may cause somebody not to open an account. Not enough money or account fees are too high. Negative, I apologize. Negative information in banking history, negative information in your credit reports and low credit scores. That doesn't necessarily mean that you will get turned down for opening a bank account. It might just be that the person feels like because their credit report or their credit score is low, that they may get turned down, but that isn't the case. They don't look at your credit report when you're actually just opening an account. There could be negative information that you may have to correct, but they don't ask to pull your credit report unless you're actually applying for some type of loan. So that would be a reason somebody may think, oh, I can't, but that shouldn't be the issue when opening an account. No social security number, or maybe the products and services is something that doesn't align with what they're looking for. Things to consider is low cost account options. So again, doing that research and finding out what those fees are up front so that you have a good idea of what it's going to cost you monthly or just to open the account in general. Second chance checking account, credit building loan, or a secured credit card might be an option if you're wanting to rebuild. And lots of banks and credit unions offer some type of credit building whether it be the card or a loan. So they provide those services or products. And other identifying documents, a lot of times now they're going to require some type of proof of residency. And then, of course, you would need your Social Security card or your North Carolina ID, state issued ID. They may all ask, so as long as you have your NC ID or your driver's license and some type of, I apologize, my light just went out. Or that proof of residency. So those are going to be the two main ones. Again, you can call, you can go online, you can see what kind of information that you would need to open that account, just so that you have all of that information before you go. You can always make an appointment. I know that's a lot since post-COVID is, getting those appointments. Sometimes it's harder to just walk in or the wait might be longer. So. Okay. This is very important. If there is a bank that you are interested in or a credit union and you really, with the credit unions, Truliant and a Legacy, for example, are not credit unions that require you be a part of a specific organization in order to become a member. State Employees Credit Union is. I think of like Navy Federal, somebody in your family would have to have been in the military. And, but if there's a bank or a credit union that you, of course, are able to do an application or open an account with, and you're eligible, but you have some kind of past history. The best thing that you can do is if you've tried to open the account, they have declined you and they say, unfortunately, we're not able to open an account at this time. And they give you this check systems number. Definitely look into it. You can either go online, you can call and just find out what it is, get the past history taken care of. Sometimes it could have been a $29 NSF fee that you got on your account. You walked away from it, maybe, and I'm just using this as an example. But maybe there was a fee that you didn't feel like you could, should have received. And so it was $29, but it's still showing up under check systems. So, in order for you to get into that bank or credit union that you really want to be in, it's a great time and a great way to just go ahead, figure out what it is. I always recommend, once it's been cleared up, give them, 2 to 3 days to get the system updated. And then you can see if there's any paperwork that's required. Is there any proof? Do I need to pay off this $29 and get a receipt and upload it so that you now know that the account has been paid? Anything that they need, they will let you know to get that settled, and then you can go back and reapply and just see what they say. But this is a great way to go ahead and get that cleared up and taken care of. So this is just the difference between deposit protections when it comes to your bank or your credit union. The bank is protected insurance up to at least $250,000 per depositor, per FDIC insured bank, per ownership category. So this protects your funds. It's a great reason to have your money in a bank or a credit union. If you want more information around deposit protections, you can go to the link below. It's www.fdic.gov. And credit unions are also under their own insured institution. It is the NCUA, which is the National Credit Union Administration. They also allow $250, the same per share member per insured credit union for each account ownership category. So, and again, their link is www.ncua.org. If there's anything that you want to know about your specific bank's protections. The other thing that I recommend is, again, it takes time and research to really see this. But if you go on to the homepage of any bank or any credit union and you go down to the very bottom of that homepage, it will have their disclosures and it will have everything their fees, if you're looking for savings account fees, if you're looking for non-sufficient funds fees, what that is for each bank or credit union. They have to provide those disclosures. So I know now most of the time you just pick up the phone, but if you were interested and wanted to see what that looked like, you could find that information on their each bank or credit union's homepage. So I just wanted to let you know that as well. So managing your accounts, you want to keep track of your deposits and withdrawals, review your account statements. You want to set up those email or text alerts if possible, just so that you know exactly where, if a deposit's coming in, if you've got a withdrawal going out. Consider overdraft protection programs. This is a great, it's called a line of credit. So it can be attached to your checking account. That may, I'm trying to get my words right here. That may reduce the amount of NSF fees if it is a loan. So, you'd have to go through your debt to income, how long you've been employed, what your credit score is, but it acts as an overdraft to your checking account. You can use your debit card, but it really helps if you have one of those situations where you don't get paid till Friday, but you've got a bill coming out on Wednesday. And where am I going to get the money? I don't have the funds. So then it pulls from that overdraft protection and can really reduce those NSF fees. So if that's something that sounds good for you, you could look to see what the interest rate is. And I know personally on mine, I have definitely used it over the years just for that purpose to reduce those NSF fees. But typically, what I like to do so that I'm not being charged very much interest is if I've used it and then I get that paycheck come Friday, I just pay back what I had to use. And then that way I know I've always got that as an emergency backup. So I always recommend staying safe online. Anything that you giving access to anybody, any of your account information, you just always want to protect your assets as much as possible. And then you must understand the rules of your account and keep track of how you use it. There aren't very many times when an institution, whether it be the bank or credit union, will come back and say that it was their error. So we want to do our due diligence and make sure that we are doing the best that we can to keep our money and to earn a little bit of money and just pay down those interest loans as quickly as possible so that we can save for future spending down the road and develop keeps costs down and develop a positive banking relationship. And then lastly, we just want to be able, to help protect your money. These are just some tips. Never share verification codes, login names, or passwords. Use strong words, passwords plus two-factor authentication. Ask for your bank or credit union to add extra controls to your account. Those transaction alerts again, low balance alerts, large withdrawal alerts, login alerts. Check your accounts regularly. Protect your personal information. That comes with family member and friends. Keeping that information safe and put away is best practice. Choose the right types of accounts for you and your family, whatever those needs may be. And then putting it all together, I just recommend asking questions with whatever institution that you use. Go in, say, hey, what are your promotions? Or can I speak to a loan officer? This is what I've got going on right now, and I want to see what products and services that you have that might be able to help me and my family. Choose the right banking relationship for you. One that might be convenience might be a big thing. We're in a situation with gas over $4.20 that having a bank close to you might be something that's very important to you. Be a good steward of your money, protect your money, keep up with the account balances, and then, of course, if you want to seek additional help, with just budget, credit, anything like that, please call Financial Pathways or make an appointment, and we'd be glad to assist you. All right. So I'm not sure if any questions, I'm going to leave this up for just a minute. I'm not sure if any questions came up in the chat. I know we're a little bit early, but that's okay. That just gives you a little bit more time for lunch. There we go. Okay. Well, I'll just give it a few minutes, but again, if any nobody has any questions or anything like that, um, it's okay that we're cutting out a little bit early. This was just, just a re-reminder of what we have so much information out there when it comes to banks and credit unions and what those options are. So it's a great time to really research and see if your bank is doing the most for you. So thank you. Bye.